Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Monday, the 7th of January. Another exciting day in the market, maybe. I guess it depends on if you're a bull or not, but we did see more bullish activity. Good afternoon, Adam. Hope the market treated you right today. Hope everybody had a good day trading. It was nice to see some follow through, wasn't it? Off of Friday's break. We saw so many. We talked about it on Friday. We saw so many things break resistance, which, believe it or not, was a buy signal, right? So it was nice to see some follow through in that here today. So definitely an interesting day, and we still have some room to run. That's not to say that we're certain to get it, right? We still are, in the midst of a longer term downward move. But as you kind of look at where we are in the indexes and a lot of the different sectors, at least, there's some room between here and there, between here and that next real challenge. So good afternoon, Whitney. I hope you had a great day, my friend. Not really a lot going on the earnings front going into tomorrow. I don't think anything reported tonight, and just a handful of small cap companies and Helen of Troy, which is a mid-cap stock, reporting tomorrow before the open. So really light. But next week we do kick up. There's about 40 S&P companies that will be reporting next week. So, of course, I'll be like a broken record. So just make sure you're checking those earnings calendars for all the trades that you're in or looking to get into so you can plan accordingly, whatever that exactly means to you. So taking a look at the S&P 500, we're able to break through, and we're kind of right there on the edge of closing back above this old support level. If you look at the ES futures contracts, I think you could say that we're above it. All our other indexes, the NASDAQ and the Dow, are above it too. The S&P kind of right on that line. I think probably technically we're there, but not as clear to maybe identify as some of our other indexes. But really our next real challenge, assuming that this is, again, you could make an argument maybe either way, but really not a whole lot until we get to around 26 if this actually can break and push through. So still a little bit more upside in a lot of places, really, certainly in the over in the S&P. On the NASDAQ, we're not going to have the debate, right? So I always prefer not to have the debate personally. Clearly taking that out, of course, closing above that on Friday, carrying over that momentum here into today. Probably, going to be looking at around 66 is kind of where I'm going to be watching, is kind of that next level of resistance. Our 50 is going to kind of work its way a little closer to that, although probably not quite get there between now and then. You never know, though. It'll kind of line up with some of these old floors, this old zone, but still a little bit of room to go over in the world of the NASDAQ as well, carrying on. And again, we've seen this a lot. A lot of the things that we were looking at on Friday carried over, where we put in that higher low and that higher high, carrying that through. So again, as we kind of talked before, that is going to be a shorter term buy signal. We do want to remember we are within the longer term downward trend. I don't think anyone would really argue against that, but that doesn't mean there can't be some buying opportunities for us to take advantage of along the way, right? And certainly, I don't know if any of you guys traded Dollar Tree. It was in the options report a couple of weeks ago, but it getting close to the second target right now. Crazy to think that a bullish stock's able to get to a second target. So, but it can happen. Over in the Dow, again, clearly, much like the NASDAQ did on Friday, clearly closing back above that old support level with not really a lot, until we probably get into that 24 is kind of where I will be eyeballing. It's a support zone. Maybe as importantly, it's a nice round number. Again, I'm not going to go crazy from a bullish point of view because I want to keep, the context in play that we still are in a downward move. And I don't really think that, anything has come out and really said that that's done. Certainly I don't think that's happened from a technical point of view. Go look at any weekly chart and we're seeing a lot different stories, right? Still in those downward moves. So we are seeing some short-term movement, and that's how I'm going to approach it personally as we kind of work through this week. I'm not going to get too crazy, but definitely going to be open, whereas a couple weeks ago, well, none of us were open to a bullish trade, right? Of course, it was pretty easy watching it free fall. easy to not be a bull during that period, right? So a little bit of room to rock and roll over on the Dow as well. Now, we did kind of smash right into that 1400 area on the Russell. As we've talked about before, that is definitely a nice zone, a nice round number at 14, an old resistance zone for sure on days gone by. Should be, and I don't think it's coincidence that that's kind of where it called it here today. We saw some good price appreciation until we worked into that. The Russell definitely has had a nice rally, no doubt about it. If we can clear this again, just kind of thinking in that next step, probably looking at 1450 again as that next major level of resistance. That'll kind of line up with our old support where we had that pretty significant breakdown, as well as that falling 50-day moving average. I don't want to take for granted that we're going to push through this zone. I can only speak for myself, but if I were in, the Russell in a bullish position, I'd want to take profits here personally, right or wrong. I don't know, and I know not everyone would agree with me, but that zone does, give me a little cause for concern from a technical point of view. So nice carryover day from a broad perspective, no doubt about it. It's kind of changed, and Matt and Tim were talking about this a little bit in the halftime report. A lot, but not all, but a lot of the charts have changed where we've kind of last week they looked like purely textbook bearish retracements. This week there's still plenty of them out there still, but we're also seeing those short-term reversals creating those higher lows and higher highs, which we've seen develop over the last handful of trading days. So moving on into our different sectors. And on a few of these things, I kind of went in this weekend and kind of drew the long-term trend line just to help give me perspective, right? Some of them I was able to do that on. Some of them it was not really happening unless I wanted some really weird looking trend lines. So, but I think we kind of have an idea over here where we're at on the materials. Saw some nice movement. Now, a lot of things, again, like we've seen the last few, upward days, a lot of things kind of died down the second half of the day. We did see some late day, moderate, nothing dramatic, but moderate selling on the second half of the day. But really, again, nice clean close above the previous level of resistance. We know just from days gone by that this was a pretty significant price zone for the materials sector. Still got a lot of overhead. We're going to have to deal with the falling 50. We're going to have to deal with this old support zone. We're going to have to deal with this trend line. So there's still plenty in our way. Maybe not as much room as maybe we're going to see, at least in my mind, in some of the other sectors, but still kind of in that upward swing. And again, another solid close above that resistance zone. We are starting to develop some trend lines that we can kind of monitor for turnaround points. If we are looking at things still from a bearish retracement point of view, some of these areas are going to allow us to kind of draw these short-term trend lines. And sometimes it can be helpful to go in on a shorter time frame just to kind of, okay, that trend line is not quite so steep when I look at on a 2-hour chart, right? So, we are starting to develop that in some of these different sectors. It can be something that we can watch for, especially if we're looking to sell into, what the eventual, profit taking that will occur, right? Whether we should or shouldn't, will or won't, we know that that eventually will happen. We can probably keep an eye on some of those trend lines to give us a place to kind of eyeball. Over in energy, we did have a nice upward movement again today. Now, crude got like within a quarter of $50 and retreated off of that, as we'll see when we get into crude. So, I don't know how much more I'm comfortable saying energy has personally. I'm really looking at that 50 to be a pretty good challenge over in the crude world. So that's going to be something that I'm going to be keeping an eye on myself. Just individually, though, thinking about where we are on the energy sector, we still have a little bit of room to go before our next level of support, which was pretty significant, a pretty clean break when that took out. So we still have a little room to go, but you're going to have to kind of see how you feel about the whole crude situation if you're playing the energy sector. Maria just asked if anyone does the mutual fund thing, and I do not, Maria. I've really never been all that interested in the mutual funds myself. I know a lot of people do like them, and of course, if it works for you, I'm okay with that. But one thing that I think a lot of traders, and again, I can only speak for myself 100%, but things I've heard before is they're fairly difficult to trade, move in and out. That's one reason why I like ETFs so much. I'm able to, kind of have that same concept of a mutual fund, which is basically a basket of stocks that are put together for one reason or another, right? ETFs can kind of do that too, and I'm able to kind of self-manage those ETFs. For me, ETFs, in my opinion, are just far superior. I don't have the fees. I can make the decisions. They're a lot more, not all of them, but the ones I work with are more liquid. So for me, I don't do the mutual fund thing personally, and really have never been too interested in it, to be quite honest with you. I love ETFs though, much like Adam. He also does the ETF thing. I'm a huge fan of liquid ETFs. Right, you get in the habit, if you trade for a while, you get in the habit of weeding out who's illiquid, who has options and things like that, because not all ETFs do. Certainly, all the ones that we follow do, though. The sector spiders are very liquid and have lots of different options that we can work with. So. Kind of getting back into our sector analysis. Again, financials carrying on, much like so many other areas, much like the market. We're able to break resistance, carry that on here today. Again, starting to develop that upward trend. And then again, I think this is, for me, and maybe you guys are different than me. I'm sure you are in a lot of ways, but I'm sure in a lot of ways we're the same too. It always helps to take, shorter time frames to kind of just give me some perspective. I always am bouncing around the time frames as I'm trying to evaluate things. So nice movement. Really don't have a lot until $25. As you really kind of think, we've closed above the 20 now. So we've taken out resistance, we put in a higher low, trust it or not, we broke resistance, we closed above our shorter term moving averages. We're actually starting to see that 9 cross back above the 20, or getting pretty darn close, which is a buy signal, right? Maybe not one you're interested in taking, but certainly, when a fast moving average crosses a slower average, there are a lot of people who do use that as a signal to buy or sell. Little bit more room here. There definitely is. Now, still plenty of overhead all over the place, right? No doubt about that. But really kind of a lot of clear space, if you will, between where we are and approximately $25 over in the financials. Over in the industrials, continuing that, again, much like the financials, able to close not only above resistance, but here above that falling 20-day moving average here today as well. Unlike finance, that has a fairly clear path to the next level at $25, I think when you look at the industrials, well, I think maybe there's an argument to like it better overall from maybe a little bit of a longer term perspective. From a shorter term perspective, there's lots of different levels of overhead. Most notably this zone that we're not too far away from. Depending on where your line is, you could maybe even argue that we kissed it on the intraday and sold off of it today. I don't think I would make that argument, but it's close enough that I wouldn't put up much of a fight if somebody did. Lots of overhead, in particular on the industrial sector, in my opinion, but kind of coming back full circle, we're still seeing the bulls are in pretty good control right now. And what I'm really interested in, we really, started to see it happen. I guess that was Thursday, where we had, some things start to sell, and potentially, there were certainly bearish trades that did trigger that day, at least depending on your trading rules. Depending on mine, they did. So, but other than that day, now we've developed some intraday upward trends that are pretty recognizable, pretty easy for us to identify. Going to be really interesting to see, what happens when we, test those intraday trend lines, break those intraday trend lines, potentially. Should be fun. Run into some longer term levels of resistance. Should be an interesting week. And good afternoon, Abel. Hope you had a great day trading, my friend, and a nice weekend too. It snowed here in Utah. We got a fair, not a ton, but enough to have to go shovel a couple times. So I'm ready for January to be over. I don't like the snow all that much, but I live in Utah, so I deal with it. So looking at the technology sector, again, very interesting. We were able to break out on the NASDAQ, clearly taking out that resistance level, and not happened just yet in the tech. And I don't know exactly what to make of it. I said it Friday, I still feel the same way. So I'll get to your question in just a moment here, Maria. I'm not going to ignore you here. Just kind of don't want to get too sidetracked there. Taking a look at where we're at, you just kind of, I don't know, Abel, it's kind of off that we've taken out resistance in the NASDAQ, which I think is a pretty clear buy signal. Whether or not you're interested in taking it or not, that's another debate. Not being able to do that, at least yet, over in the tech sector, kind of a little off. Some of the discretionary is kind of leading the way, maybe over in the NASDAQ. Who knows? Still in a very easily, again, identifiable longer-term downtrend, just like we are pretty much across the board. Well, not all, utilities is really sideways, right? Not everything, maybe even real estate is sideways. Should be a challenge area. If this breaks, probably is a little more room, probably would mean that the NASDAQ is continuing to push up. So there is still some potential upside, but we've not taken out, at least in my mind, resistance yet over in the technology sector. As we move into the staples, the defensive sector, if you will, I don't know. I'm not loving this sector. I'm still not really loving it, but my opinion is my own and I'm entitled to it. We are seeing similar things develop over here as well, where we were able to put in that higher low, and maybe even a little more impressively. And, we clearly saw some downward movement, right? For a lot of our sectors, it was kind of sell on Thursday, rally and close, or get to resistance on Friday and carry over today. Maybe there weren't textbook definitions of a pivot, but I think when you look at the staples, we had several days of downward movement, which of course was taken out here on Friday when we broke out. We're able to carry that here today. Again, not really loving this area myself. It's not an area that I'm finding all that appealing right now personally, but I am seeing the same signals that I'm seeing in things like, the material sector and the financial sector and things like that. So from a purely technical point of view, my opinion notwithstanding, because my opinion is my own and sometimes it's right, sometimes it's wrong, right? We still looking very, very similar. We want to keep an eye, in my opinion, because I think you can be bullish in this area, but I do think you want to keep an eye at $52. That was a pretty significant breakdown point. Yeah, I think so, Abel. 25 on the financials. There's really nothing there. There's really no reason for it. I mean, it may not happen, right? But when you're looking at, things much like the staples, there really isn't a lot here until 52. When I compare the two, and again, we have to decide that these things for ourselves, they are similar in that, regard. There's room from where we are to the next challenge. Financials 25, staples here at 52. It was the steep downward movement and the slow, gradual, slowing momentum, breaking trend, breaking support, breaking trend. I really didn't like the way that developed. And I'm, if I'm going to be trading into a, bullish rally, assuming, whatever else that might mean, we are kind of seeing a bullish rally right now, whether it's just a short-term thing or ends up being longer. I just rather look into other areas personally. That have maybe a little more upside. Now, again, that doesn't mean I wouldn't trade a consumer staples sector tomorrow to the up or the downside, to be honest with you. Going to the downside, I still have a long-term, downward movement working for me. Going to the upside, I have some short-term things, but their individual chart would really have to be impressive, I guess, for me to want to look at that from a bullish point of view. But again, we have to decide these things for ourselves. I always like to start with, hey, what really is happening? Okay, this is a buy signal. Maybe I don't like it as much as other signals I'm getting, and that's okay. But I always want to recognize that, what's happening right before I make too much of a, get too caught up in my opinions, because we're all entitled to opinions, but that's all that they are, right? As we move into the utility sector, continuing to trade within this little trading range. Of course, PCG, another really down day, some 20% down, as it looks like they're at least rumors about bankruptcy with them. They were certainly not doing the utility sector any favors today. A little bit beyond that, though, we really are kind of at a major support zone, kind of stuck in a little bit of a sideways rut right now with a pretty clear level of where support is and where resistance is, right? And really, as long as we're in this range, I think you just say it's neutral, and that whatever that might, maybe you're doing some covered calls on it, maybe you're doing some credit spreads, maybe you're just letting it hang out, wait to see what way it decides to break before you make any moves. And I would understand really any of those things. But I think right now we do kind of want to look at this from a neutral perspective. In the shorter term, we are at a pretty long support level, but at the same time, we just broke a fairly long, upward trend line. So a little bit weird right now, really overall pretty sideways if you kind of take yourself out of the today. Over in healthcare, interestingly, they tried to break, like so many things were able to break or continue their breaks today. Healthcare tried to break out today before really not even able to carry on any momentum, selling off the second half of the day and closing clearly below that old resistance level. So we are going to need at least another day before we see any buy signals there. Now, these guys are at a much easier to identify level of resistance, right? Whatever we're doing with the sector, we can all clearly see that, that was an old, resistance level. Maybe more importantly, just recently, that was staring right in our face. It's hard to miss that one, right? Right now. And so that makes sense that that's an area that we're going to struggle. Weren't able to continue, that momentum off of Friday, at least from a technical point of view, in my mind, closing clearly below the 20, clearly below, probably more importantly, that old support level. So keep an eye on that price. If we're able to push through that, there is some more room. We have some flatlined, 200-day moving average that we'll have to take into consideration if we do end up breaking to the upside. But other than that, depending on how we feel about that, really don't have a lot until we work back up into this 89 range. But again, hasn't happened yet. Has not happened yet, and kind of a little odd. And I'm not terribly surprised. I was going through the stocks, over the weekend and on Friday. I found a lot of interesting bearish breakdown candidates. They weren't the retracement type of candidates in healthcare, but they were more breakdown type of candidates. And so there were some things that weren't looking all that great technically. Looking at the discretionary, this was today's winner. No doubt about it. Strong movement over in the discretionary sector. Certainly a solid day across the board for equities, but really nice job on the, for the discretionary. Ran into their 50, and really that's kind of where they kind of called it good. We're seeing the same things where we've created that higher low, taken out resistance. So we're seeing some nice momentum. Got a little room between here and our trend line. We do want to respect, I think, that 50-day moving average. Not necessarily as a brick wall, but I do think if we're talking a week from now, and we say, yeah, 50-day moving average is where, it found resistance and it sold off. I don't think any of us would be all that surprised either. So keep an eye on that, but showing a lot of good solid movement over in there. Maybe some things are starting to turn over. And I think maybe an interesting thing to do really quickly is to go into our discretionary, take a look at a couple of things. One that caught my attention maybe the most was Starbucks, where haven't seen any signals yet, but of course, if you remember Starbucks, they kind of took out that resistance level back in happier times in November, and we're kind of hanging around there right now. If we were to break that, it would look a lot. I can't remember who brought up XLNX last week, but it'll look a lot like that chart if we're able to push through. So that's kind of the type of things we're seeing. If you look at, say, a Nike, still have some serious overhead resistance. So these charts are maybe starting to turn a little bit, as you look at the discretionary, and you can kind of, check your own, of course. But, we still are in that overall downward move. So really interesting, solid movement today. We are starting to see some turnover, at least in a few of the individual components, but across the board, still kind of got some, some serious overhead in a lot of those discretionary stocks before they are back into bullish trends. Over in the real estate department, just kind of hanging around. Again, we've put in that higher low, but not made that higher high, right? And so this could be an area that, and I'm cautious with it right now. I don't really love real estate, but if we, break to the upside, there could be some opportunity, in the shorter term for price appreciation. Clearly hasn't happened yet. So may not. Resistance is still working over in the real estate sector. We have, of course, placed that higher low. We'll see what happens. Are we able, or do we double top here and work our way back down? I don't really have a strong opinion either way. I just don't really love overall the real estate sector right now. Don't really think I'm going to be too excited from a buying perspective if it breaks myself. And then lastly, over in communication services, another solid day. Of course, remember, when you're talking about the communication service, it's ETF and not the sector itself, very driven by Facebook and Google. Both classes of the Google shares. They're very, very large components percentage-wise of this ETF, working into the 50-day moving average, which again, better or worse, has never been able to break through that average and carry on that. We've never broke resistance by any means, but we are seeing some nice movement, right now over in that. Of course, we have the Netflixes, and Netflix has really kind of started to show some signals, to the upside as of late. still, you're going to have a hard time selling me that this is overall the place to buy, if we're going into things. But again, that's just me. We do want to keep in mind, we've never been able to clearly take out that 50, not my opinion, a fact, right? We've never been able to take out the trend. We've never broke swing resistance. So, if you are trading into this, I would understand that showing some solid, price appreciation in the short term. Just keep in mind that it's still in a bearish trend, I guess, is all I would say to that. I think, there are better clear areas to look. And again, individual components, as long as it's in the upward swing, I'm okay with that type of stuff. But across the board, we've just never seen, ever since the inception of the ETFs, I've said many, many times, and hopefully one day I don't have to say it anymore. I'm sure that will be true. But until then, we have never broke resistance. We've never cleared the 50. So things that we do want to respect, even if we're going, the other way. So that will do us for our sectors. Taking a look here, Abel just asked how to save the lines on the chart on tackle trading. You should be able. I don't know. I always do my charting on this larger software. Then I'm guessing you're talking about the market skyline, Abel, is where you're kind of looking to save them. If you go into, make sure I got the right question there. Because if you do them directly on the TradingView platform, which is what I'm using here, it should save them automatically. If you're on tackle trading, what you might want to do is go into the Trade Center, just hit Trade Center, and that there is a place in there where you can build a watch list for yourself. I don't know if you guys are aware of that, where you can actually build your own watch list where you can save those lines. I'm not sure in the market skyline if you can save them or not, to be quite honest with you, Abel. So I've not tried. I know I've drawn lines on them, sitting with people before, and I don't really remember them sitting there because it's not kind of saved to you, if that makes sense. So if you wanted to set them up, what I would probably do is just go into the Trade Center, scroll down a little bit on the page. If you haven't found it before, there is a place where you can build a little bit of a watch list for yourself where you can do just that. I hope that answers that question for you there, Abel. Shifting into our dollar and commodity, I guess we'll look at the VIX here really quick. Continuing to see some downward movement as we're seeing the bulls, having a nice little run, right? Again, I don't want to assume that volatility is over. I don't think that it is. In some ways, I hope I'm wrong, but we are seeing that volatility die down. But again, that's it's easy to do when things are going well. It's that next wave of selling. I would expect the VIX to spike in the next wave of selling. That doesn't mean it has to spike back to 36 though, right? Let's see how, again, that's going to be, so much information, I think, when that next wave of selling comes in, how committed are the bears? How committed are the bulls? Are they willing to buy when things start to sell off a little bit? So, but not a whole lot to see here. We did break down over in the dollar index, clearly breaking and closing. And again, I've been using 96 as kind of the primary area to be monitoring. Clearly took that out. But interestingly, we did kind of close at what would be probably true bottom, where we've had these, last couple of tails. So if you wanted to, make sure that was taken out before you said, let's look at this, from a purely bearish point of view, at least in the shorter term, I would understand that. On the other side of things, if you just said, hey, these are just tails, I would understand that too. So that would probably come down to your trading rules. I still think, you have to be looking at it with at least a little bit of bearish bias. Certainly if it takes out, these lows, these tail lows, I think you have to be looking at it with at least a little bit of a bearish bias in the shorter term. But certainly a signal that I think you could technically trade if you were trading, directly into the dollar index. Over in the metals, we're just kind of do that little dance, it looks like, for a bit. We're staying above our breakout points. We're not quite ready to even challenge the next level of resistance, which of course on gold is at approximately 13, and I am using 13 just because of its round number nature. But really, kind of as long as we're continue to hold in here, I mean, this was kind of be the most likely thing, I think, but we can see a little bit of a deeper pullback and that would be okay in my opinion too. Really, anything to 1260. Right now, I expect 1280 to be a fairly reasonable level of support, and would expect buyers to come off of it at that price. And 13, of course, I do think we want to look at that as a pretty respectable level of resistance. We did test it briefly once on the intraday. I don't think that's a bearish place, at least until the chart starts to turn, and I don't really expect it to. We'll see as time goes on, but not really surprised that it's kind of taking a breather here by any means. And a very similar situation going on with silver, kind of taking out that old support zone. That's really been kind of a major level in days gone by. Nice round, approximately $16 ahead of us. So really, I don't think you change your overall stance on gold and silver right now, whether they immediately keep running, take 5, or even pull back a little bit more. I don't think that will change my opinion as we go forward, but really just kind of trying to figure themselves out, right? And they had a very extended run. They're showing a lot of bullish signals. Nothing can go straight up or straight down, right? And so taking 5 is not necessarily a bad thing. Over in the natural gas department, a whole lot of nothing. About the only thing, and again, as I've said, and I know I'm 100% on board with Coach Tim over at Tackle Trading on this, not a place that is a great directional trade right now. And I know that Tim and I are on the same page there. About the only thing that I can see shaping up, and we talked about it last week, is from an intraday level, if this little floor that we've built over the last couple of days ends up breaking. I could see that presenting an opportunity from a shorter term perspective on an intraday level, but really very still volatile. We're dying down in volatility a little bit in that, at least, according to its ATR, but really still not very well behaved, very gappy, and all of that fun stuff. So I still think, for me, this is a wait and see. There will be an opportunity. And it's just not yet. But if you are on a more intraday level, I think you can watch this little floor, see how it responds off of that in the days to come. We can kind of look at this old resistance. Again, we're starting to, it's only 4 days, but we're kind of developing a top and a bottom, right? Which, again, probably more important to an intraday trader than a swing trader, like I primarily would consider myself. But we can always watch for those things. So, yeah, I'm not sure, Abel. I'll ask somebody else so that won't save for you, or maybe I'll play around with it in there and see if I can come up with something for you on another day. So I'm not sure. I never do anything to save my charts; they just save. So me and technology, Abel. But I'll dig around, see if I can come up with an answer for you. But I'm not going to have it today. But I'll see if someone else or if I can play around with it and find it for you. Lastly, over in the crude department, again, we got awfully close to $50. Let's just come into an hourly chart, kind of see that price action here today. Didn't quite make it as everybody's watching 50, right? Whatever happens at 50, we know everybody's watching it. We saw some of these nice happy bulls take some profits, starting to see some shorter term sell signals starting to develop. Nothing dramatic on the hourly chart necessarily, but we did close below the 20 period moving average, or 20 period moving average, right? For the first time in quite some time. The 9 is kind of crossing to the downside. If you look at in maybe a 15-minute chart, we're kind of seeing maybe we're topping out, a little bit of a failed breakout if we break our support level here. So we are starting to see some subtle signals on the intraday. We definitely saw profit taking at I think 1470 or 4970 something was where it 79. So I mean, it got really close. I don't think we're seeing those signals just yet, but we're starting to see some short intraday signals develop over in crude. So if your game plan was to look for selling opportunities on crude at approximately $50, well, hey, we're here. You can start thinking about what that might mean to you, right? I don't think we're there just yet. Like I said, we are seeing some, signals on shorter term time frames, but we would expect that, right? At least I would. I didn't expect it to push right through 50. 50 is important, I think. I think it should be a good resistance level. I know that people are going to be interested in selling there. If we're able to push through it, that's going to be a pretty big deal for the buyers as well. From a bullish point of view, hey, I might want to sell it. I might sell it at $49 or 40, $9.50 or $48.50. I'm not going to be selling it at 51, right? So, if this does break above 50, the buyers, for whatever it's worth, they won't have to worry about me. And I'm certain I'm not alone in that department. So, really interesting day in the market, no doubt about it. Liking where crude's developing. Hopefully, we see a little bit of consolidation. Get that that doji. We need a doji, right? So see how that develops. That's probably what I am most interested in the immediate future, in the immediate days to come personally. But should be some interesting opportunities for us as the week progresses. Like I said, Friday, and I think I probably don't need to tell you guys this, have game plans for both sides of things. If we're going to continue this upward move, whether it's for another 4 days or another 4 weeks, have some, bullish trading candidates. You don't have to trade them, but you want to be ready if you decide that that's the route you want to go. At the same time, don't forget that, as little as 3 trading days ago, we were looking at potentially entering, or maybe actually entering into bearish retracements, right? That's the kind of market that we are in right now. And I hope, I'm good with it. I would love it to go back to being a stock pickers market instead of a all or nothing market. I welcome that day personally. So I know that Maria had a question. I got to sneak back up the chart here. So Maria asked, she's with the financial advisor. She has a Roth IRA. You're 100% aggressive growth in your account right now. So that's from a bullish point of view, Maria. So everything is on the bullish side of things over in your account. Things like, hedging can be a great way, just doing covered calls to protect your, and bring in some cash flow off of if you're able to do that. Buying protective put options or looking to add some bearish delta, to kind of to delta weight your portfolio a little bit if you are uncomfortable, is always an option as well. I'm not exactly sure what you're comfortable with doing and what your options are with your individual broker, but those are definitely some ideas if you find yourself that your portfolio is all to one side. And one thing that I think a lot of us here at Tackle Trading try not to do is that, as we kind of like to, got some bearish trades, probably have some neutral trades, probably have some, bullish trades. And sometimes we're going to be more skewed to one versus the other, right? Just depending on the overall nature of that current market. But that's kind of the general approach that we take, at least I take to, and I know a lot of, individuals here with us and over at our clubhouse and in our other shows at Tackle Trading do as well. But those are some things, if you find yourself too aggressive and you're too, much to one side, right? Whether that's bullish or bearish, I wouldn't want to be 100% bullish or bearish right now, either one. I guess if I had to, I'd probably go with a longer term trend and go bearish, but I wouldn't feel great about that by any means. And so, I would kind of look to things that we could do that. So so if you're uncomfortable, you can add some bearish trades. You could do things like, take bearish positions on something like the Spider ETF, SPY, that just, of course, tracks the S&P 500. You can buy, put options on, against your stocks to kind of protect it from that point of view. Well, if the stock drops, I'm making money on the put option. If the stock goes up, well, that's good for me. I'm basically didn't need the insurance after all, but like all forms of insurance, it's good to have. We never want to use it, right? So that can be an idea. You can, of course, sell some calls against your longer term positions to bring in some capital, regardless of what ends up happening. It's some capital, right? So, those are things you can consider as you're, managing your portfolio going forward. Individually bearish trades, bear plays, going against the indexes, say the S&P 500, or, it could be something else as well. Protective puts, as Adam said, covered calls. So there's a lot of options for you. If you find that, I'm too bullish or too bearish at any given point in time, adding, something to the other side. And like I said, there's lots of ways that you can do that. And a lot of that will depend on what you're comfortable doing and what your personal goals are. Of course, you may not like the exact same things that I do, but that wouldn't make your things wrong, right? So, hopefully that gives you some ideas of what you could think of, ways that you can approach that. Maria, I know maybe not a specific answer because it's really hard to give that, and I'm not licensed to anyway, but hopefully that gives you some ideas of things that you can think about, if you find yourself in that position. So and then we can get out of here. So if we were going to go short right now, Abel, I mean, what we're going to have to do is kind of, again, think about, it from an aggressive point of view. And not everyone's going to be this way. Right now, I think your first entry point, for a bearish play would be the break right here. A break right here would probably, in my opinion, be the first area where you could technically go bearish. And that's going to put us, around 48.37 or something like that. That would be, the first place. Not that you should, not that you will, not that I'm certainly telling you to do so, but that would be the first opportunity. If we look at that on an hourly chart, again, it's going to kind of line up from that point of view. Okay, well, let's kind of play the fast forward game. We were in an upward trend. We pulled back. We didn't make that higher low, but we got back to support. Support held. We rallied back up. And again, we're thinking about a potential trigger to the downside. So we, bounced a little bit, but we didn't run up and make a higher low, right? We made a lower high, then we worked back down and broke and thus made a lower low. Right? Does that make sense, Abel? So again, that's not how you should or you will, or I'm certainly not telling anybody here to do that, but that's how I'm always going to, build my trades. If I want to get into crude aggressively, that is the way that I would be looking at it, looking into it from a shorter time frame. Hey, I know why I'm selling it at $50. I want to make sure I have a good technical signal. Not seeing that when I look at maybe a 5-minute chart. I'm not getting confirmation yet on a daily chart. I'm probably going to just wait and see how it develops personally. But if I wanted to, I really want to get in here, I'm just going to scrunch my time frames down and see what I can find for some potential entry points. And again, I hope that makes sense. And it's not just crude. That's kind of how I would go about, building those up. And it's a good question, because whether or not it's crude or some of these other bearish retracement candidates that are still looking interesting going out, there's still some of them have been kind of taken away right through the breaking of resistance, but some are still just kind of in the retracement mode. Might be looking to some intraday if I wanted to move in a little bit more aggressively. So right now for me, it's going to be, that's what would have to happen for me, at least, Abel. I'd have to clearly take that out. Then I would be saying, hey, on the hourly chart, on the shorter term time frame, I'm seeing some sell signals. I've taken out trend, and of course, it's all got to start somewhere. I would just keep in mind, if that's the route that I'm going to go, that's fine, but that's, early, right? And so I'm taking on a little more risk for a little more upside. And it's okay if I choose to do that. It's okay to say, you know what, there's no reason for me to do that. Maybe it'll work out in hindsight, I should have, but I can let it close. I can get that doji, like you said. Love to see a doji tomorrow. Then we could talk, right? It's okay to say, hey, I'll get that or I won't. But if I don't, well, maybe nothing will develop, but something eventually always does, right? So hopefully that gives you some ideas, Abel. Yeah, but I think, as you said, if I could just make it do anything I wanted it to do, I would let it maybe, push up a little bit more, another small body candle here tomorrow, doji on Wednesday, and start to see some downward movement on Thursday, all below $50. If I could paint the picture I would want to see, that's kind of what it would be. And maybe even two more small body candles here right below that $50 line, followed by that doji, followed by that downward movement. That would probably make me feel the best. So, and like I said before, I may or may not get it, but it doesn't hurt to ask, right? It doesn't hurt to know what I'd like to see, because sometimes it works out that way, right? So, all right, ladies and gentlemen, as always, it is certainly my pleasure, and I do appreciate everybody's time. Should be an interesting week in the market. Like I said, be open. You don't have to do anything ever. Never have to do anything you're uncomfortable with. We can just watch all week long if we want to, but always have options. What do I want to do if I do want to go bullish? What do I want to do if I want to go bearish? Maybe you do nothing. Maybe you just go with one side or the other. But we always want to have the options, right? That's always an important thing. So with that, ladies and gentlemen, if you're new around here, be sure to subscribe to our YouTube channel and hit that notification bell so you can be alerted to any new videos or live streams that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter as well to keep up with some of the interesting things that we think we're finding during market hours. If you guys enjoy the market recap, it is always helpful and appreciated if you do give it a thumbs up, just to let us know that it's helpful and let YouTube know that it's helpful too, I guess. So with that, ladies and gentlemen, we'll see you tomorrow. So happy trading. Get out of here, and I will see you all in the next one.